Hi, this is Ben Hart for BitcoinInstitute.net. I'm going to talk to you today about how to measure Bitcoin's dominance of the crypto world correctly. First off, I don't consider Bitcoin even to be part of the crypto world. Bitcoin is not crypto, and it's not blockchain. There's nothing special about crypto or blockchain. Cryptography and blockchain can be used in a centralized way or a decentralized way. SHA-256 cryptography and blockchain technology are used by banks and e-commerce sites to secure their computer networks. But this is only part of what Bitcoin is. Bitcoin is a one-of-a-kind asset. Bitcoin is the world's only successful decentralized digital money. In fact, Bitcoin is the only money, whether physical or digital, that was not issued by a government or a corporation. Bitcoin is not controlled by anyone or by any small group. Bitcoin is the world's only unconfiscatable, uncensorable money. And Bitcoin will not be replaced by something better, for reasons that I will get into in a moment. But first, if you like this video, I ask that you please hit the like, subscribe, and notifications buttons, and follow me on Twitter. Also, check out my book on Bitcoin on Amazon, and sign up for my free Bitcoin weekly report at BitcoinInstitute.net. Okay, let's review how dominant Bitcoin really is in the so-called crypto space. The media often talks about Bitcoin dominance in the crypto world. If Bitcoin dominance hits 50% of the crypto market, the media says Bitcoin is doing well. If Bitcoin dominance drops below 40%, we're told this is bad for Bitcoin. Bitcoin dominance tends to drop during bubbles, as speculators try for bigger gains with the so-called altcoins. Altcoins are crypto assets other than Bitcoin, but that are not stable coins. During manic altcoin buying bubble peaks, Bitcoin dominance tends to drop, as the casino gamblers jump into the market right before the blow-off top. These are the retail casino gamblers who rush into the altcoin market near the peak, only to get slaughtered. When the overall crypto market drops, Bitcoin's price drops too, but not nearly as much as the so-called altcoins. So during market drops, Bitcoin's market dominance rises, as people look for the more stable asset. It's a predictable pattern. But the media, not knowing what Bitcoin is, usually lumps Bitcoin in with the other 20,000 plus crypto assets out there. These include gaming tokens, art auctions, NFTs, scammy lending platforms, online gambling, lotteries, and all kinds of other garbage. What's happened is all kinds of scammers, grifters, fraudsters, and con men have tried to piggyback off of Bitcoin's success to make a quick buck by creating all kinds of fraud coins. Now, I don't know if all these altcoins are scams. I have not studied all 20,000 of them, but 99% of them are scams. If we include all 20,000 of these crypto tokens and assets, Bitcoin accounts for about 42% of the crypto market today. But that is not the correct way to measure Bitcoin's market dominance. Correctly measured, Bitcoin is 95% of the market. Of the 20,000 plus cryptos out there, I count 9 coins that are actually trying to compete with Bitcoin as a decentralized money that uses a proof-of-work consensus protocol. The proof-of-work consensus protocol is the only way to create a decentralized transaction validation structure, and it's the only way to secure a decentralized monetary network, as I explain in other videos. If the money is not automated, if money is controlled by a small group, and if it's not decentralized, it can't be honest money. It's fiat money. It's confetti money that will be debased to zero, as happens with all fiat currencies. Satoshi found a way to remove humans from the money system, to automate the money system with fixed rules. The most important rule being there will never be more than 21 million bitcoins. If we exclude venture capital projects with initial coin offerings or ICOs, and if we exclude stable coins, and proof of stake or other centralized projects, Bitcoin is actually 95% of the cryptocurrency market, because the other crypto assets do not even purport to be money. The only 9 coins even claiming to compete with Bitcoin are Litecoin, Bitcoin Satoshi Vision, Bitcoin Cash, Monero, Dash, Zcash, Bitcoin Gold, Dogecoin, and Decred. Though these coins are attempting to be decentralized and do use proof-of-work mining as their consensus mechanism, so similar to Bitcoin that way, these networks are very small or almost non-existent, so can quite easily be overwhelmed and destroyed by a denial-of-service attack if a well-funded attacker, such as a government or a big corporation, wants to put the effort in. So these other proof-of-work decentralized money networks are not secure because they're not big enough. They don't have enough computing power to secure their network. In a proof-of-work security structure, the larger the network grows, the more secure it becomes, as I explain in this video here and in this video here. Now, Ethereum is the number 2 crypto asset out there. It's about half the size of Bitcoin. And I exclude Ethereum from this list of competitors to Bitcoin because, number 1, Ethereum is not trying to be money. Ethereum claims it's trying to be a decentralized internet for decentralized applications, such as gaming, art auctions, and so-called DeFi, decentralized finance, which doesn't actually exist. Number 3, Ethereum was always a centralized project from inception, from its founding. Number 4, Ethereum was launched with venture capital and an initial coin offering, which is like a public stock offering. So Ethereum is really just a company, a corporation. It's organized as a nonprofit, but it's a corporation. It's really an unregistered security. And the SEC, the Securities Exchange Commission, should crack down on it. Number 5, there was a massive pre-mine prior to Ethereum's ICO, in which upwards of 60% of today's supply of Ethereum was only available to a small circle of founders. 6, Ethereum has always been under the control of its creator, Vitalik Buterin, so it doesn't qualify as immutable money with a fixed set of rules. Ethereum is a dictatorship of one. In fact, Vitalik has repeatedly threatened to vaporize people's ETH coins if they don't do what he wants. Number 7, Ethereum's rules are a moving target, constantly changing. Number 8, no one knows how many Ether coins exist. Number 9, Ethereum cannot be audited. So Ethereum in no way qualifies as money. It's an unregistered security. In my view, illegal. And I wish Gary Gensler over at the Securities Exchange Commission would get his act together and look into this. And this is pretty much the truth with all these altcoins out there. They are unregistered securities, therefore illegal under U.S. law. We also exclude stablecoins as a competitor to Bitcoin because stablecoins are just tokens pegged to the value of the dollar, similar to casino chips. People don't buy stablecoins with the hope that they will rise in value. They buy stablecoins because they want them pegged to the dollar. And the supposed use for a stablecoin is to enable easy, cheap cross-border transactions. It's cheaper than Western Union or a bank wire. Stablecoins are akin to checks. They're an extension of fiat currency. The top 2 stablecoins are Tether and USDC. These are both products of companies, so are not decentralized, and they don't purport to be. So stablecoins are not competitors to Bitcoin because they are not decentralized, and they're not trying to be money independent of the dollar. So once we narrow down the field to projects that are actually attempting to compete with Bitcoin as decentralized money with a fixed set of rules and a fixed supply, Bitcoin is 95% of the market. The above listed 9 currencies that qualify as competitors to Bitcoin are all attempting to be faster versions of Bitcoin. Now Dogecoin, I don't know, is it Dogecoin or Dogecoin? I never know. Dogecoin was actually started as a joke in 2013, as a parody of Bitcoin, to show that anyone can create digital money. And that's true, anybody can. Bitcoin is open source software that anyone can copy and paste, make a few tweaks to launch a new coin. And many have tried this. And you could say the same about Facebook. Anyone could just copy Facebook's code and structure and try to compete with Facebook. But that wouldn't work because what you can't replicate is Facebook's network of 2 billion users. As of now, Bitcoin has about 180 million users. This network of 180 million users, plus more than 1 million miners and nodes validating transactions and maintaining and guarding the network, is what's difficult to replicate. And Bitcoin's adoption as money is happening at about twice as fast as the rate of adoption for the internet from the 1980s through the 2000s. Now, one of the best measures of Bitcoin's health is the rising hash rate. Hash rate is the amount of computing power being used by Bitcoin miners to mine for Bitcoin and protect the network. Even though Bitcoin's prices dropped dramatically over the past year, mostly due to highly publicized scams and collapses in the altcoin market, Bitcoin's hash rate continues to climb. This means more miners are joining the Bitcoin network every week and every month. They are investing their time and billions of dollars in specialized Bitcoin mining computers because they are confident of where Bitcoin's price is heading in the long term. Bitcoin's network of more than 180 million users and more than 1 million miners and validating nodes is what's so difficult to replicate, and I would argue impossible. So right now, Dogecoin is the biggest competitor to Bitcoin among the cryptos that are purporting to be decentralized money. Bitcoin's market cap is $315 billion right now, compared to $10 billion for Doge. And the only reason Doge is this big is because Elon Musk, for some reason, has been pumping Dogecoin, apparently as some kind of a joke. I guess he liked the fact that Doge was actually started as a joke. So Doge is about 3% the size of Bitcoin right now. Then after Doge, Litecoin comes in at about 1% the size of Bitcoin. Its mission is to be a faster version of Bitcoin. But the problem Litecoin has is that Bitcoin solved the speed and scalability problem with the Lightning Network, which is built on top of the Bitcoin base layer. So there's no use case anymore for Litecoin. The other 7 competitors to Bitcoin are less than 1% the size of Bitcoin. Another reason it's so difficult to compete against Bitcoin as digital money is that Bitcoin has also established a strong brand in the public mind. Bitcoin was the first successful, truly decentralized digital money that has a fixed set of rules. There will never be more than 21 million Bitcoins. In fact, Bitcoin was the first usable digital money, whether decentralized or otherwise. And the fact that it was first and successful made Bitcoin a brand because of all the media attention. A brand is enormously valuable. Most people cannot even name another crypto asset other than Bitcoin. If you ask people on the street what Ethereum is, very few would know. When people think of cryptocurrency, they think of Bitcoin, or they just say crypto. Now think how powerful a brand is in the business world. Take the Coca-Cola brand. Coca-Cola is considered one of the most valuable brands in history. Now there's nothing especially unique about Coca-Cola. It's just sugary water. Its value is its brand. Coca-Cola was created in 1892. And because it was the first cola drink and it was successful, it was popular, Coca-Cola will never lose its position as the number 1 cola drink. There was room for one competitor to Coke, and that was Pepsi. There was almost no room for a third competitor in the cola space, which was RC Cola. Not sure if there's even a 4th place cola drink. And even though most people prefer Pepsi in blind taste tests, 7 times more Coca-Cola is sold than Pepsi. That's the power of a brand. Once a brand is carved out in people's minds, it's very difficult to dislodge. I can't think of any brand of bleach other than Clorox. There are others, I just can't think of them off the top of my head. We always buy Clorox. That's the power of a brand. There aren't many more valuable things in life than a strong brand. Bitcoin now has a very strong brand. So there are 3 elements that I think will make it very difficult, I would say impossible, to dislodge Bitcoin as the number 1 digital money. Number 1 by far. Number 1 is Bitcoin's network of 180 million users, network that's growing every day, and 1 million Bitcoin miners and validating nodes. Number 2 is Bitcoin's decentralized structure. Bitcoin is the only truly decentralized money network. The other proof of work networks, the 9 coins that I just mentioned, their networks are tiny. Number 3, Bitcoin has a strong brand in people's minds. So let's take a look at some of these other top crypto assets. As mentioned, there's Ethereum, which is about half the size of Bitcoin. But Ethereum is not trying to be money. It's trying to be a decentralized internet for decentralized applications. But it's not decentralized, and the applications on Ethereum do not work well at all. I've tried them. The user experience is dreadful. So Ethereum is a failed project already. A lot of people just don't realize that yet. For more on this, take a look at my video, 17 Reasons Why I Do Not Invest in Ethereum. Okay, so the next coin on this list here, the number 3 coin, is Tether, which is a stable coin, pegged to the dollar. So Tether is not trying to be money. Tether is a product of a company based in Hong Kong. If you trust a company based in Hong Kong with your money, have at it. Next on the list here is Binance Coin. This is a token issued by the world's largest crypto exchange called Binance. It has a market cap currently of $48 billion. And that's compared to Bitcoin's $314 billion. The Binance crypto exchange was founded in China in 2017 by a fellow named Changpeng Zhao, who people call CZ. Binance Coin is supposed to be sort of like buying stock in Binance. So it's another unregistered security. And it's very definitely not decentralized. The coin was created by CZ. It's similar to Sam Bankman-Fried's famously failed FTT token. Remember, Sam Bankman-Fried had built FTX starting in 2017 into the world's second biggest crypto exchange. And remember that CZ is the one who took down his number one competitor, Sam Bankman-Fried and FTX. And if you'd like to find out how that all went down, check out my video here. And actually what CZ did to Sam Bankman-Fried was pretty awesome. He exposed Sam Bankman-Fried as the fraud that he is. What happened is someone leaked the balance sheet of Sam Bankman-Fried's Alameda hedge fund. CZ, very intelligently, saw that the bulk of Alameda's assets were made up of Sam Bankman-Fried's FTT token, which he had created out of thin air, which he had just printed up, and which he was using as collateral for trading on margin on a very big scale. So it appears that what happened is CZ shorted Bankman-Fried's FTT token, then announced on Twitter that Binance was dumping all of its FTT tokens. This caused Bankman-Fried's FTT token to collapse to near zero. So nice play by CZ. Not that CZ is any angel. He's under investigation by the U.S. Justice Department for money laundering and tax issues. Binance is not allowed to operate in the United States. Now Binance is headquartered in the Cayman Islands. So I would not want to trust CZ with my money either. Certainly not my life savings. So no, Binance Coin certainly does not qualify as a competitor to Bitcoin. It's the opposite of Bitcoin. With Binance Coin, you have to trust CZ with your money. Probably not a good idea. CZ's Binance Coin has gotten a boost lately because it's assumed that CZ now has Bankman-Fried's money. So if we move down the list here to number 5, we have another stable coin called USDC. It's pegged to the dollar and is the product of a company based in Boston called Circle. Now, stablecoins pegged to the dollar are supposed to be backed up one-to-one by actual dollars or U.S. treasuries. So again, stablecoins do not qualify as competitors to Bitcoin and are certainly not decentralized. With stablecoins, you have to trust that they really are backed one-to-one by actual dollars or U.S. treasuries. They're also not FDIC insured. CZ also has a stablecoin. If you buy CZ's stablecoin, he says he'll pay you an interest rate of around 5 or 6%. Again, trusting CZ with your money over there in the Cayman Islands is probably not your best bet. If what you are interested in is unconfiscatable money, then there is no competitor to Bitcoin. So I've been saying here that Bitcoin is 95% of the cryptocurrency market if properly measured, but it's really 100% because there really is no competitor. Any money that is owned or controlled by someone or a small group of people means that your money can be confiscated at any time. The U.S. government or your bank can grab your money at any time with a push of a button. If you're in a civil lawsuit, a judge can freeze your assets until the lawsuit is over. If you're trusting the Sam Bankman-Frieds and CZs of the world with your money, well, that's on you. Bitcoin is the only truly decentralized digital money. Bitcoin is the only unconfiscatable money. Bitcoin was not launched with venture capital. Bitcoin is not owned or controlled by anyone. Bitcoin is the only money that was not issued by a government or a corporation, or launched as an investment vehicle or venture capital project. Bitcoin is an open source software protocol in cyberspace that distributes a synchronized ledger of transactions to more than 1 million computers, miners, and validating nodes worldwide. Anyone can participate in validating transactions who wants to download the Bitcoin software and participate as a validating node. All transactions can be watched and tracked as they occur, live and in real time. The entire Bitcoin blockchain can be audited back to the first block, the Genesis block, which was mined on January 3rd, 2009. Nothing like this happens with any other crypto asset. But for your Bitcoin to be unconfiscatable, you must not leave your keys on an exchange. The last thing you want to do is trust the Bankman-Frauds and CZs of the world with your Bitcoin. If you leave your Bitcoin on an exchange, you are at great risk of losing your Bitcoin. You could fall victim to the next Bankman-Fraud, or the government might take it, or your Bitcoin might be frozen or seized if you're in a civil lawsuit. None of this can happen if your Bitcoin is on your private keys that you control, with your cold storage hardware wallet. Not your keys, not your coins is the rule. Now, I do use Coinbase to buy my Bitcoin, and that is an exchange. But then I immediately move my coins off of Coinbase onto keys that I own, that I control. Remember what Bitcoin is for. Bitcoin is your insurance against political and economic system collapse. If all hell breaks loose here, or wherever you're living, you need to be able to carry your wealth with you to wherever civilization might still exist in some form. Take custody of your Bitcoin. That's the entire point of Bitcoin. With Bitcoin, you don't have to trust someone else to protect your Bitcoin. With Bitcoin, you are your own bank. Bitcoin allows you to be a sovereign individual, under the control of no one but you. You don't have to trust the Bankman-Fried or the CZs of the world to protect your money. Again, if you liked this video and found it useful, please hit the like, subscribe, and notifications buttons. Leave a comment if you have time. All this interaction will send a signal to the algos to spread this video and this channel to others who need good information about Bitcoin and how to protect our freedoms. Also, check out my book on Amazon. Subscribe to my Bitcoin weekly report at bitcoininstitute.net. Have a tremendous day. See you back here soon for the next video.